Good afternoon. How's everybody doing? This is Craig Modelmog for this week's episode of Wall Street X's and O's. It is Friday, September 24th. How crazy is this? We are literally about 7 days out, 6 days. How many days are in this month? You know, that's an interesting one. There are 30 days, so we are 6 days out from the end of the third quarter. Crazy, I say. And yeah, what else you gonna say? You know, the time flies, so you better enjoy it. That's all that I can say. To kick things off here, I will kick off my disclaimer, and that this show is for informational purposes only. The information on here is not designed to tell you what to do from an investment standpoint, a tax standpoint, a legal standpoint. It's not meant to tell you anything to do. It's meant to educate and inform you. It's not designed for a specific type of investor or age of an investor. Investments can and will lose money. They are not FDIC insured. And that's all I feel like talking about today. So we are going to move on. So welcome. I got a good show today. Top three things. We're going to talk about inflation. We're going to do a little inflationary update domestically and globally. What? You say global inflation? Oh yeah, it's coming. And you know, the whole world, we are in a global inflationary environment, which does all sorts of fun things. We're going to talk about a COVID update, positively non-political COVID update. Let me tell you, I'm not going to get mouthy today, although I could, but I will abstain from mouthiness today. At least I'm going to try to. And then I'm going to kick out, really kind of close out and put the emphasis, or the most of my focus today, on my Q4 macro themes update, which is a big one. Okay. So kicking off inflation. Fun fact, they always compare the CPI, which is Consumer Price Index, versus the PPI, which is Producer Price Index. You may ask, Craig, what the heck is the difference? Well, let's start there first. CPI, all right, which is inflation that we hear a lot, is the total value of goods and services that consumers have bought over a specific period of time. It does not include food and energy, though. You know, I kind of laughed going back, and I'm not going to pinpoint the president when that all changed so they can control inflation more, because I want to be non-political on this, although I think they both suck at the moment. Not to really get mouthy again. See, I can't help myself. It's Friday afternoon. I'm kind of tired. You know, with that comes mouthiness. But anyway, so CPI measures the things that we buy, goods and services. Okay, PPI on the flip side measures inflation from a perspective of the producers. So companies that are making things, manufacturing things, what is it costing them to make things? So if you take CPI, you subtract it from PPI, right now you get about a minus 5% number. Well, you say, well, Craig, what the heck does that mean? Well, what's interesting is the last time we had that type of a discrepancy, or that level of a discrepancy, was 1974. Does anyone remember the 70s? I know I was farting around being a stupid little kid at that point in time, so I just go back and I look in historic standpoint of what was going on in the 70s. But for those of you that were adults working and living and breathing in the mid 70s, what is the one thing you remember? Inflation was off the charts, interest rates were unbelievably high, and that's all I got to say. So what's interesting is the government still is calling this transitory. I'm not going to bash the government any more than I need to, because that's just asinine. It's not transitory. And I think we are starting to see this. The stickiness is what I've been calling, is going to stick around for a much longer time. Case in point here, let's move on here. If you look at rent rates, they track the change in rent prices in the top 35 cities throughout the country. Did you know that in 24 of the 35, they are in double digits for the month of August? They're up double digits, okay? Led by, and for those of you that are joining me for the first time, This is uncut and unedited, and I just kind of wing it. Sometimes I get irritated and I say bad words and I make bad jokes, but we have a good time, and hopefully we get done and you laugh and go, it's freaking Model Mog, and I did learn something today. So we want to learn something. Spokane, Washington, number one, 31.1% increase in rent rates. Number two, Tampa, Florida, 29.5. Number three, Jacksonville, Florida. Sucks to be in Florida. Expensive in Florida. 23.4, followed by Phoenix, Arizona, 22.9. Where does Denver come in, you say? 12.3. Yep, that is not inflationary at all. Not at all. So anyway, we got to keep our eyes on that, all right? Moving on here, let's look at some other things impacting inflation. First of all, you've got governments around the world that are completely undisciplined. And what's that smell? For those of you that live in northern Colorado, whenever the wind blows the wrong direction, you smell the feedlots in Greeley, Colorado. That is not the feedlots you're smelling. That is the printing presses of governments around the world printing money, okay? That is not a good thing. We've got world economic inflation right now is at a 5-year high. We have, what else? World United, okay, this is the UN Food and Agriculture World Food Price. Yeah, I know that's a fancy damn term. Say that fast on a Friday afternoon. It's not been higher. We're right now just right a hair above 30% increase year over year in food prices, probably going higher. The only other times going back since 1990, what is that, 1991? Yeah, it's a long time. 1991, that's 30 damn years. Global financial crisis, it tipped above 60%. And during the Arab Spring, which was in November, actually around 2011, it went just above 40%. We touched 40 a little while ago, kind of dipped down, probably going to take off again. Aluminum prices hit a 13-year high. Natural gas prices have hit a high we haven't seen in 5 years. Gas prices, ooh, yep, it's going to get more expensive at the gas pump. So, you know what, get ready. Inflation is here and it is here to stay. It's going to remain elevated and sticky. COVID update. This is my non-political COVID update. First of all, let's talk about what happens. COVID cases go up, consumer confidence goes down, service activity goes down, service sector employment goes down. You notice how you have lots of bad things happening. COVID up, consumer confidence down, service activity down, sector service employment down. That makes sense. Things close down, people don't go out and don't spend money, thus you don't need to hire people. All right, flip side, here's what's happening. COVID, especially the Delta variant, has finally peaked. It's rolling over, okay? As we know, when you look at new cases, what is soon to follow that is on the lag is hospitalizations and deaths. So in the next week or two, we will probably see hospitalizations roll over, and then we will see deaths roll over. Excuse me, I think I'm going to die. So anyway, those are positive. So then what my case is, and this leads into my Q4 macro themes, is what I am anticipating and how I am begun to position from a probabilistic standpoint. Yeah, I know I'm using a lot of big damn words for Friday. If you don't know what probabilistic means, look it up. Moving on. Q4 macro themes. First of all, we're going to go back to Q3. At the end of Q2, we were in a transitionary period. I was saying we were going to see the economic rollover and begin to decelerate, but we were going to see inflation remain what? Elevated and sticky. That is exactly what happened. That is called stagflation, okay? Not transitory, which is the word of the damn month on Sesame Street in the US government, okay? I said labor inflation was going to remain challenging and that inflation was going to be sticky. I talked about the positives in Europe. I said China was going to suck and emerging markets were going to suck. That is exactly what happened. Now, moving forward, Q4, we are positioning probabilistically, okay? That means probably. That means looking good, okay? for this. We're starting to see growth begin to accelerate again. Where are we looking for that? We're seeing the dollar start to show weakness. We're seeing small caps start to wake up, okay, which is a positive. Now, we're not going to see something crazy like we did in the first and second quarter where you could buy whatever piece of crap company out there you wanted to, and it went straight stinking up. That's not going to happen again. But we are seeing small caps start to re-emerge, okay? I'm watching that very closely because I think in Q4, we're going to have an environment where you're going to see growth accelerate along with inflation remaining elevated and even accelerating, okay? That right there tells me a couple things. One, yep, small caps come back into the picture. Two, tech, you want to own it. Three, REITs, you want to own it. Four, I'm kind of tired. Industrials, you like industrials? We like consumer discretionary. Yes, we do. Retail could come back. Why? COVID. Ooh, now tune in. Lights clicking. Click on moment, right? You hear what I'm saying? If COVID is rolling over, okay, and let's just say that continues. All right, let's hope it does. And all of a sudden we see economic activity pick up in the fourth quarter. Ooh, yeah, that's what's starting to happen. We're starting to get there. Portfolio-wise, last month, what I do? Add a little small caps, all right? What are we also looking at this month? Emerging markets. Scary, I know. Now, do you just go out and buy the emerging market index? Full time out. That's a no. If you do that, you're going to own China. China is a piece of poop right now. You don't want to own China, and China is a bad place to be. It's going to be a bad place to be for a little while here, another couple quarters. So you stay away from the EM index. You have to look at what it owns. I'm telling you. And you know what the number one position is in all of the emerging market indexes? China. You know what's hilarious? Think about this. On Monday, the world was ending Monday. If you didn't know that, it about ended. Yes, this stupid China company was going to default on its debt. And they said that COVID was rising. And you know what happened? Nothing. You know what the president of China, I don't know if you can call it, let me rephrase that. You know what the dictator of China came out and did? He says, oh, by the way, they're not going to default in this. And by the way, they're fine. So eluded total global financial crisis and catastrophe. It's fine. Anyone who believes anything come out of China, I have some swampland to sell you in Colorado. Yeah, and there's none here. So that's why I'm going to sell you some swampland. Don't believe anything coming out of China. It's garbage. You have to really key off what the leader says, because whatever he says is what's going to happen. He's starting this new 100-year plan. Do you really think that he is going to allow things to continue to spiral out of control? What is he doing? They've changed from their one kid requirement, where if you had more than one kid, they were like killing babies and shipping them off over the world. Sad, true. Now they're like, oh, you can have 3. You know why? They had a deceleration of population. And you know what? The dictator of China needs people to make his game work. So that's interesting. What's the other control mechanism that he just came out and said? He said that kids can only play video games 3 hours a day. And people bitch about what happens here in the United States when they say wear an effing mask and get an effing vaccine shot. Unbelievable. In China, now that's real control. People, come on, work with me here. Okay, that's bad. All right, so they're making things. China's still a bad place to be. They came out today and said that Bitcoin and Ethereum are illegal. Okay, you're seeing this massive clamp down. You know why? Democracy is starting to spin out of control in China, and the dictators don't like that. So things be changing in China. All right, so back to my EM thing. You have to buy EM on the spots where you need to be buying them. So don't buy EM index. Wait and see what we're buying, because I'm not going to tell you, because it just doesn't work that way. I'm not going to front run myself and let you run out and do all sorts of things, because timing is crucial. So anyway, but there's good things. I'm expecting Q4 to be decent. We do have a debt ceiling fight. I don't think the Republicans or the Democrats can afford, either one can afford to lose this gig. They're going to think they're playing tough guy or tough girl. And you know what? At the end of the day, I actually think they probably come up with something that's going to enable the government to continuing to go on. We have a midterm election next year, which is critical to both parties. And just to recap, our politicians only do things to get themselves reelected. And that's how short the time span that they look at. Unfortunately, China plans for 100 damn years. We plan for, the next election cycle. It is what it is, right? Anyway, could be much, much worse, and we have much, much to be thankful and grateful for, despite the challenges that we see every stinking day on the news, on our Twitter feeds. And once again, I'm not going to get on my soapbox, but you need to really continue to evaluate where you get your news. If you are trusting one news source, you are misinformed. Okay? I'm going to hit you in the nose on that one. If you trust one news source, you are misinformed. Just telling you. Anyway, we got some good stuff. Q4 is going to be good. Growth should begin to reaccelerate. Inflation is going to remain sticky and elevated. Global inflation is accelerating. We're seeing costs and continue to rise all over the world, and emerging markets may come back into play. Not yet, but may. So keep your eyes on the prize. For Friday, I was going to say November. Damn, we're not November. For Friday, September 24th, this is Craig Modelmog. Thank you for joining me on this week's Wall Street X's and O's. I hope this was helpful and starting to frame up how we're going to finish the year strong, because we have to. We got to really stay focused right now because there's lots of things going on. It is measuring and mapping the data every day, measuring the rate of acceleration, the rate of change, the rate of deceleration, that rate of change. And you know what? With that, that's how we stay ahead of the game. All right. Right now, it's all good. Wall Street is negative. How many people have been calling for a 10 to 20% correction? It's not going to happen. I'm telling you, the VIX was down. VIX dropped below 20 yesterday. It was down today. It's at 1775. The NASDAQ VIX is almost below 20. If that drops below 20, y'all better own some tech. I'm telling you. VXN, watch it. If it dips below 20, watch the NASDAQ or watch tech companies. Blast off, I'm telling you. Thanks for joining me. It's always good to see you all. Love you all. Take care. Have a great weekend. And I am out.